Good morning, everyone, and welcome to Bloomberg UK, a news show with a special focus on the biggest challenges facing the British government, the economy, financial services and markets. I'm Francine Lacqua here in London. Now, on the show this week, the UK is pushing for closer financial services links with the European Union following the breakthrough deal on Northern Ireland, but it's not yet clear if the agreement has enough political support. Also on the program, could the Brexit deal put UK assets on the long road to recovery? We'll discuss what that means for investors and more of our interview with the chief executive of the LSE Group. It plans to buy back £750 million worth of shares from a consortium, including Blackstone. Now, the British Prime Minister Rishi Sunak dubbed it as a decisive breakthrough as he and his EU counterpart, Ursula von der Leyen, unveiled a post-Brexit deal on Northern Ireland trade agreements. Well, Leanne Gerrans is here to walk us through the deal and what's ahead. Hi, Leanne.
Francine, hello to you. So this is a breakthrough deal between the UK and the EU, really aimed at tackling one of the stickiest post-Brexit issues, Francine. That's trading rules for Northern Ireland. It's called the Windsor Framework and will reduce checks on goods travelling from Britain to Northern Ireland through a system of a green lane for goods that will stay in the region and a red lane for goods which will travel onwards to the EU, just seen on the map here. It also introduces a new mechanism. Now, that's called the Stormont Break, which will allow the Northern Irish Assembly to challenge changes to certain EU rules. This is meant to give politicians a say over how European laws do apply to them. European Commission President Ursula von der Leyen described the deal as extraordinary and said it would ensure a long-lasting solution for all the parties involved. Meanwhile, Prime Minister Rishi Sunak says the agreement would protect Northern Ireland's place in the Union and deliver smooth-flowing trade. Now, one of the key goals is getting Northern Ireland's DUP to approve the new Brexit deal, and that's to restore power sharing in the region. Yesterday, the Democratic Unionist Party's chief whip, that's Sammy Wilson, said the party will not give a knee-jerk response. This is the next piece in the puzzle for Rishi Sunak. He needs to ensure his Windsor framework is successful, and the goal is to see the Stormont Assembly up and running in time for the 25th anniversary of the Good Friday Peace Agreement next month. So, Francine, we are all waiting for the DUP to give their verdict on this new and latest deal.
Leanne, thank you so much. Some fabulous reporting there on exactly what we found out this week, Leanne Gerrans. Now, for more, let's also bring Bronwyn Maddox, Director and Chief Executive of Chatham House. Bronwyn, thank you for joining us. Are you optimistic that it's plain smooth ahead, it's plain sailing ahead? Are we going to get this through?
Well, it depends what you mean by get it through. Can Rishi Sunak get it through Parliament? Yes. Labour, the opposition, has already said, yes, it will support this. He has enough Conservative MPs that together with Labour can get this through. The question is how many of his own Conservative MPs want to cause trouble and whether or not the DUP comes along. That matters not so much for getting this through Parliament, but for whether the Assembly, which we were just hearing about, the Assembly in Northern Ireland, that power sharing agreement that is Assembly that is at the heart of the Good Friday Agreement of 25 years ago, whether that can get up and running, because that is the government of Northern Ireland, and we've had periods, up to about 3 years when the power sharing failed, and the civil servants were trying to run it. But they have been saying quite plaintively, look, there is a limit, there's a point when there's real political decisions, that have to be taken by politicians, how much to spend on this or that. And so it really matters, to get that up and running, but it's not the same thing as the whole legislation.
But do you think, first of all, that the DUP will accept Rishi Sunak's Brexit deal?
They haven't said no immediately, and that has been what they've tended to say about all kinds of things. So this is, in a sense, good news. The DUP isn't any longer one entity. There are clearly very different voices in there, and there's a lot of disagreement going on. Do I think they'll all accept it? No. Do I think they'll accept it enough to get back and agree to take part in Northern Ireland government again? Possibly, but they are an unpredictable force in politics. They've sometimes been dubbed the party of no, because they can see their objections to things more easily than they can see, a compromised way through. But there are people there, Peter Robinson within there, saying, look at how bad it might be if we don't accept this. So there's a big argument going on. I wouldn't put 10 cents on it either way, I'm afraid.
I know, and it's difficult to speculate at the moment. We know that they're, if not casting doubt, certainly saying that they're still analysing the Brexit deal and won't make a knee-jerk reaction. But with every day that passes, is it more likely that they accept the deal?
I think it's more likely that they accept it with each day that passes. As I said, their main reaction has tended to be in the past when they don't like something to say so immediately. So I think they would like to find a way through. And they can see the amount of support there is for this, including among Northern Ireland people and businesses. But they're a very unpredictable political force. Yeah, I think he should press ahead. Their electorate is getting, their voters are getting much more nuanced, much more complex. Many people who were DUP voters, diehard DUP voters years ago, now saying, well, look, we trade, I'm a small businessman, I'm a farmer, I trade across the border, I need that border to the south to work. I need the border with the UK mainland to work, or there to be very little obstacle there. So I want something like this to go ahead. So I think they will get pressure from their voters. And I think Rishi Sunak, yes, should push ahead.
Thank you so much for joining us, Director and Chief Executive of Chatham House, Bronwyn Maddox. Now, we'll have plenty more, of course, on the UK show. The UK and the EU finally agreeing on a post-Brexit trade deal, although for the moment it's called a framework. What does this mean for investors? Where does it leave British assets? We'll discuss that next. And this is Bloomberg. Economics, finance, politics. This is Bloomberg UK. I'm Francine Lacqua here in London. Now, we're just getting some breaking news out of the BOE. This is the publication of a decision maker panel survey. And they say, this is according to the BOE, it's a BOE survey saying that UK firms expect an average wage to rise 5.7% in coming years. Now, actually, in the coming years, in the next 12 months, that seems definitely below what we have at the moment. And then we also have a little bit more, of course, insight into inflation expectations. So inflation expectations for the same firms that the BOE has surveyed, they expect it to be 5.9% in 1 year and then 3.4% inflation in 3 years. Now, the leaders of the UK and the EU both hailed last week's post-Brexit trade deal as a chance to reset trade relations between the two sides. But for investors in British assets, the repair work is only just beginning. Well, joining us now is Bloomberg's John Stepek, who writes our Money Distilled newsletter. It's fantastic, so I urge everyone to go and have a look. And then also Lucia Giptopoulou, who covers the asset management beat. So thank you both for joining us. John, I love really reading your newsletter on house prices, on what this means for UK assets. First of all, how long does it take for, I guess, the encouraging news about better ties with Europe to filter through UK assets?
I mean, that's a good question. The things we don't know.
Hard question.
It's a very hard question. Exactly. If I knew the answer to that, I'd go on a private island somewhere. No, but I think the thing to understand is that UK assets have been shunned by global investors for the best part of 7 years now. And while you can argue about the economic impact of Brexit, I think you'd have to be in denial not to admit that Brexit is, has kind of created this geopolitical discount on UK assets. Now, the main thing about the deal this week is that regardless of whether it goes through or not, we've got we've got Rishi Sunak and Ursula talking to each other like adults. So the UK and the EU are no longer basically trying to stab each other in the back. And that kind of sign of reconciliation should hopefully remove some of the geopolitical discount that we've had hanging over us since 2016. Yeah.
I mean, I have a lot of follow-up questions to that. But first, Lucia, where do you see the best value? Or actually, where do you see the most unloved UK assets that could suddenly be getting a lot of interest?
I mean, UK equities have been shunned for the past 7 years. UK equity funds have seen billions and billions of outflows since the Brexit referendum. And the sentiment has started to turn, but it's not certain it's because of the Brexit deal. It's mainly because they're cheap. Some people say, okay, they have a 5 to 7 year upside. So some investors have started to go back into them.
And this is what? This is like, is it asset managers? Is the UK market still seen as kind of the beacon of success?
It depends on who you speak to, but some of the very big asset managers like Schroders, for example, and Fidelity International say they now like UK equities a bit more. Fidelity International say they're overweight, then they see a longer term upside. Schroders CIO called it in a statement to us a safe harbour for now. So I think there's a long way to go, but something might be changing.
Yeah, and politically, I guess, you know, some of the questions that we had is we've had 3 prime ministers in 12 months. There's still a lot of question marks on whether Boris Johnson comes back. We have a lot of question marks of what Labour would do with some kind of deal. So what are the questions that you're hearing from managers or investors?
Well, I think the thing is that Rishi Sunak is seen as a safe pair of hands.
Yeah. But we don't know how long he stays.
Well, we don't know how long he stays, but the thing is, if Keir takes over from Rishi come the next election, so the next UK election's got to be held before January 2025. Chances are it'll be late 2024. Now, if you think about what could happen at that point, either the Conservatives stay under Rishi Sunak, most likely, or Labour kind of wins under Keir Starmer. Now, the thing is, Keir Starmer has gone a long way to rehabilitating the Labour Party following the Corbyn regime. And I think that the other thing to kind of point out is that Keir Starmer does not want Brexit to be a problem under his watch.
Yeah.
So if he does end up running the next government, he doesn't want to have to continue dealing with this. So I think that most asset managers would see that we're now in a point where you can assume that the future path is going to be less chaotic than it has been.
I mean, I'm self-crowning you like, you know, political analyst on the program. I don't know how many people, I get asked quite a lot, like, what happens to Boris Johnson? Does a Boris Johnson comeback become less likely because of the Rishi Sunak Brexit deal?
I think almost certainly. I mean, I struggle to see. We're past the point where it's such a... any Conservative MP who wants to get elected next year, have any chance of holding on to their job, has to understand that the majority of the population, whether they voted Remain or Leave, is now, at the very least, bored of the Brexit question. They want everyone to get over it.
Never.
Well, exactly. I mean, the fact that Steve Baker, who was quite a prominent kind of Brexiteer, welcomed the deal kind of shows you that I think the calculus has changed. And I honestly think that if Boris Johnson was to try and mount some sort of comeback, it would largely be greeted with, you know, resounding, you know, no, they wouldn't be keen.
They wouldn't be keen. Look, how difficult is it, first of all, to price the Brexit discount? And you wrote a wonderful piece this week that basically says, look, this Brexit deal puts disliked UK assets on a long road to recovery. I mean, what's a long road?
I mean, it's very hard for me to say, and I would be in a different profession potentially if I could make these guesses, but 5 to 7 years is like a time frame that we're hearing from investors. Now, whether this has started because of the Brexit deal again, it's not 100%. It kind of started a bit before, but definitely some certainty doesn't harm.
Where do you think there's going to be the most interest? I don't know whether it's too soon to say whether it's Indian investors that say, look, now's a good time to get back. We tried to speak to the people in charge of attracting foreign direct investment to this country, and there's still a lot of question marks of who will have the most appetite for UK assets.
I think maybe a lot of people are still sitting on the fence because the Brexit risk has been priced in, but there are still worries about the upcoming election. There are problems with the union in Scotland. And I think some institutional investors might have started to look back into it, but specifically with locations and services, it's a bit early to tell.
So John Stepek is now really going to depress us, talking about house prices. So John, UK house prices slid at the sharpest annual pace since 2012. Is that on mortgages, or is that really just on recessionary risk?
Oh, that's mortgages. Okay. I mean, I don't think people kind of struggle to wrap their heads around this, but a house is an asset like any other. I mean, you can almost price it like you would price a bond. It generates an income, and when interest rates go up, you know, the yield you require from that goes up, and therefore the capital value of the house goes down. If you want to put it in strict financial market terms, that's basically what it is. So
I would love to see you negotiating with Foxtons. Can we just pause for 1 second? Should we just bring, every time you're looking at a place, bring John Stepek with you?
I will, I wish. But I mean, the good news is that mortgage rates are actually much lower than they were in October. They've come down since then. But even if you assume that they stay at current levels, you know, you're talking about you can maybe get a 5-year fix for about 3.94% just now. A year ago, you could get that for about 2%.
Yeah.
There's no way that can't have an impact on house prices. Now, the good news, or rather the kind of the fingers crossed scenario, is that house prices adjust and become more affordable largely in real terms. So because of inflation, house prices are actually in real terms down about 11% from their peak in August, and they're down about 4% in nominal terms. What you ideally want is for about half of it to be real terms and half of it to be nominal, because a 20% fall in nominal terms would only take us back to pre-pandemic levels.
Right.
So at that point, you're probably talking about there's a very small number of people who would be suffering from negative equity. It wouldn't be terribly catastrophic from an economic point of view. But if it falls by, say, kind of 30% in real terms, that means that first-time buyers, you know, can get on the ladder. You kind of diffuse some of the political toxicity of the housing market. And actually, that would be a good outcome. A good outcome, yeah.
John, thank you so much. We have an industry secret. I think John Stepek's DMs are open on Twitter, so if you're buying a house, just DM with mortgage advice. You're welcome, John. John Stepek and Lucia Giftopolu. Now, coming up, chip designer ARM decides against selling shares in London. We'll bring you our interview with the London Stock Exchange Group Chief Executive Officer. He's David Schwimmer. That's coming up next, and this is Bloomberg.
We regularly work with the UK government. I think it's a good level of cooperation. We work closely with stakeholders in this market. We work closely with governments and regulators in other markets as well, whether that's in France, in the US, in Asia. So it's a core part of what we do. And we have a significant regulatory footprint. So it's just part of a core competency for LSEG.
And of course, one thing the government was trying to do in terms of strengthening the finances of the City of London specifically was trying to court an ARM listing in London. And of course, ARM used to be listed in London in about 2016 before it was acquired by SoftBank. But we learned today that SoftBank is going to be going for a U.S. listing. How big of a blow is this, David, to have the homegrown tech company not come back home?
So ARM is a great British company. London continues to be a fantastic listing venue and the most international listing venue. I'm not going to comment on any specific or the latest speculation on where it's going to list. But I think there's a great conversation actually going on in the UK markets at this point. And this is it's not about listing rules. It's not about listing regulation. There's an opportunity to implement some of the reforms that the government is looking at, implement some of the reforms that the Capital Markets Industry Task Force is working on that will continue to make London that much more of a competitive and attractive listing destination and financial center.
So David, David, quickly then, do you think are you still holding out hope that ARM might list in London?
As I said, I'm not going to speculate on, this has been an ongoing saga for a couple of years, I'm not going to speculate on the latest.
That was David Schwimmer, the Chief Executive Officer of the London Stock Exchange Group, speaking to our Danny Berger. Now, SoftBank-owned ARM is said to have decided against selling shares on the London Stock Exchange. We all know that. We were just hearing from the LSE Group Chief Executive. Where does this leave politicians? Where does it leave tech giants in general? We have one person who's been following this from the very beginning. Bloomberg's Caroline Hepker, recently speaking to ARM's co-founder, Jamie Urquhart. Caroline joins us now. Good morning. Thank you so much for joining us. I mean, you did some great reporting. You went on the ground, of course, in Oxford as well. What prompted this decision?
Well, this is the issue. Perhaps frustration. Bloomberg's Ruth David actually broke the story around the issue that there won't be a listing in London, we don't think, according to Bloomberg sources. Is it frustration? 3 prime ministers in the space of a year. We know that the government has been lobbying ARM to list in the UK. And yet there has been political uncertainty. There has been, a dormant IPO market effectively in London. So the backdrop has not been good. So I was speaking to one of the co-founders of ARM, actually somebody who took the business public back in 1998. He then became the COO. He's deeply involved in technology, in electronics. And he was actually really pretty scathing about how the government has handled matters and the backdrop for innovative businesses in Britain.
There's been very little continuity, there's been very little strategy, and even now we're waiting for the government to come out with a semiconductor strategy. It doesn't take that much to start looking forward and thinking about what you're going to do, but you've got to do it. I think the government are just either unwilling to grasp the nettle, or maybe they've got way too many things to do and aren't thinking about it.
So how much of this, Caroline, is a political situation? How much of it is just actually NASDAQ offers better valuations? It's a bigger market. It has more investors.
Yeah, absolutely. Masayoshi-son has always been very focused on the US listing and has made that very clear that the investor base, the pool of money and markets in the US is very attractive. I think that it would have been a big coup for Rishi Sunak and the government had they managed to get the listing here in London. But now actually a secondary listing looks in great doubt.
Yeah, Caroline, thank you so much for the great reporting, Caroline Hepker there. Now, be sure, of course, to subscribe also to Bloomberg's In the City podcast that I host along David Merritt on Apple Podcasts, Spotify, or wherever you get your podcasts. We have a new art going with, of course, the podcast, and today's episode is about football. This is Bloomberg.